Hello traders, and welcome back to Explain the Charts. Today is October 27th, 2025, and we are doing a deep dive analysis on one of the most watched currency pairs in the world, the British pound versus the US dollar, or GBPUSD. The pair is at a fascinating point right now, seemingly pausing after a significant downtrend. In this video, we'll first cover the major news and fundamental drivers that are setting the stage for this market. Then, we'll jump into the charts, looking at multiple timeframes to pinpoint the exact price levels you need to be watching. We'll cover the bullish case, the bearish case, and what could trigger a move in either direction. First, let's talk about the macro environment, because it's providing some serious headwinds for the pound. The big news over the weekend is that top officials from the US and China have reportedly agreed on a framework for a trade deal. President Trump has expressed confidence in getting a full deal done soon. Typically, positive trade news can be bearish for the US dollar as its safe haven appeal diminishes, which would normally be a positive for GBPUSD. However, there are much stronger forces at play here. The most significant factor is the growing divergence in monetary policy between the Bank of England and the US Federal Reserve. Recent UK inflation data for September came in below expectations, holding steady at 3.8% instead of the forecasted 4%. This cooler inflation print is leading markets to price in up to 3/4-point rate cuts from the Bank of England in 2025 as they look to support a fragile UK economy. This is a decidedly dovish stance, which inherently weakens the pound sterling. Meanwhile, in the United States, the situation is quite different. The selection process for the next Fed chair is underway, with the list narrowed to 5 candidates, creating some uncertainty, but the return of the Trump administration brings with it promises of tax cuts and tariffs, which are inflationary. This means the Fed will likely need to maintain a much more cautious, if not outright hawkish, stance compared to the bow, creating a fundamental backdrop that is very bearish for GBPUSD. Now, let's see how this fundamental story is reflected in the price action on our daily chart. Looking at the bigger picture, we can see a very strong uptrend that started back in June 2024 from around the 1.26 level. Price climbed steadily for several months, peaking in late August before pushing to a higher high of 1.3427 on September 24th. That peak marked a major turning point for the pair. Following that high, sellers took firm control, initiating a powerful downtrend that has defined the market for the past month. Let's zoom in on this recent action, starting from that September peak. You can see the clear rejection at the 1.34 level, which was followed by a series of aggressive red candles. The sell-off was particularly sharp in early October, where we saw a brutal drop of over 1% on October 3rd alone, slicing through several potential support zones. This move established a new, lower trading range for the pair. Right now, the key overhead resistance is the cluster of highs from mid-October, right around 1.3450. To the downside, our immediate support area is the zone between 1.3300 and the recent low from October 24th at 1.3286. This is the floor that is currently holding up the price. If that floor breaks, the next major target for sellers would be the low from that October 3rd crash, down around 1.3090. To get a better feel for the current battle, let's switch over to the 1-hour chart and look at the last few days. Here we can see the consolidation much more clearly. After dropping from the 1.34 level last week, the price has been trapped in a tight range, mostly between 1.3300 on the downside and 1.3370 on the upside. This type of sideways movement after a strong downward impulse is often a bearish continuation pattern, sometimes called a bear flag. It suggests that sellers are simply taking a breather before attempting to push the price lower again. A break below the 1.3300 level on this time frame would be the first signal that this consolidation is resolving to the downside. Now let's drill down even further to the 15-minute chart for the absolute latest action. Here we can see the micro levels that day traders are watching. The price is currently hovering around 1.332, right in the middle of this recent chop. The immediate resistance to watch is the overnight high around 1.3326. If buyers can push through that, It opens the door for a retest of the top of the hourly range near 1.3370. Conversely, the immediate support is the recent low at 1.3316. A decisive break below this level would signal that sellers are regaining momentum and would likely lead to a test of the critical 1.3300 support zone. Okay, let's pull back to the daily chart to recap and put it all together. The fundamental story of monetary policy divergence is strongly bearish. The technical picture across multiple timeframes is also bearish, showing a clear downtrend followed by a potential continuation pattern. Let's summarize the key price levels one more time. Major resistance is up at 1.3450 and 1.3500. Minor, short-term resistance is at 1.3370 and the psychological 1.3400 handle. We are currently trading around 1.332. Our critical short-term support zone is between 1.3300 and 1.3286. The bearish scenario seems most probable, and I'd place its likelihood around 70%, based on the powerful fundamental drivers. The trigger would be a sustained break below the 1.3286 support, which would open the door for a sell-off towards 1.3200 and, ultimately, the 1.3090 major support. For the bullish scenario, which I'd give a 30% chance, we would need to see a break above the 1.3370 hourly resistance, with confirmation only coming after a decisive close above the major daily resistance at 1.3450. Until then, any rallies are likely to be seen as selling opportunities by bears. That's our in-depth look at GBPUSD. Thank you for watching this analysis on Explain the Charts. Please remember that this video is for informational and educational purposes only and should not be considered financial advice. Trading currencies involves a high level of risk, and you should always conduct your own thorough research before making any investment decisions. If you found this breakdown helpful, please hit the like button, subscribe to the channel, and let me know your thoughts on GBPUSD in the comments below.